All right, guys, Darren from Honest Money, and welcome back to another video. So in this week's video, I want to talk to you about dividends. Now, I know there are many business owners that are subscribed to this channel, and I'm sure there are many of you currently considering giving yourself a Christmas bonus. I know that I am, and I think we all deserve it after the year we've had. Now, if you are considering doing that, the most tax efficient way to do so is usually with dividends. And to be honest, if you are a director of a limited company, the most tax efficient way to pay yourself throughout the year is usually with dividends as well. So in this video, I want to go through what dividends are, look at the different tax rates there are, explain how to pay yourself dividends, and also share with you some of the paperwork that you need to keep if you do pay yourself dividends. So dividends explained. The first question is very simple. What are dividends? And the answer that I have here is from the gov.uk website. So this is an official answer. So a dividend is a payment a company can make to shareholders if it has made a profit. So there are two things you need to really focus on in this statement. Number one is the shareholders bit, and the second bit is the profit. So dividend payments can only be made to shareholders. They are not available to standard employees, and they can also only be made from profits within the business. So going into that in a bit more detail, they are only payable from either current profits or from undistributed profits. Now, what is the difference? Well, current profits are the profits from the current tax year. So we're currently at the end of November 2020. My tax year starts at the 1st of September. And I look today and there is enough money, there's enough profit in the business so far this year to pay myself from current profits. Now, if there wasn't enough profit, but in previous tax years, I had made a lot more profit that I hadn't pulled out of the business. So for example, maybe last year, if I made £30,000 profit and had only drawn down £20,000, that means I'd have £10,000 of undistributed profits left in the business. So you can pull dividends from either current profits from the current tax year or from undistributed profits from previous tax years. Now, dividends themselves are not allowable business expenses. So unlike your salary, so if you're paying yourself a basic director salary, that will be classed as a business expense and you won't have to pay any corporation tax on that money. Whereas dividends are not an allowable business expense and are actually paid after corporation tax has been applied to those profits. So whatever profit you'd make for the year, corporation tax would then be deducted and then you could pay dividends from the remainder, but they are certainly not an allowable business expense. Now, from a personal perspective, when you pay yourself, you have what is called a dividend allowance. So you can pull up to £2,000 out of the business, so £2,000 profit out of the business as a dividend under the £2,000 dividend allowance without paying any tax. On top of this, you can also use any unused personal allowance as dividend as well. So if you are paying yourself a basic director salary, so for example, I pay myself £732 per month under PAYE as a director salary. So if we do that over the year, if we do 732 times by 12, I pay myself a total of £8,784 as a salary. If I just add that to memory quickly there, and then put the 12,500 in, which is your income tax personal allowance for the year, minus what I've paid myself, that leaves a total of £3,716 of unused personal allowance. So if I add that on to the £2,000 dividend allowance, that gives me a total of £5,716 that I can pull out of the business completely tax-free as I'm using up the remainder of my unused personal allowance. Now, anything above that is subject to dividend tax rate. So up first, we have the basic rate. It's the same as kind of your income tax rates. You have basic, higher, and additional. It's just the percentages are lower. So you have the basic rate of £14,501 to £50,000 at 7.5%. Then you have the higher rate, and then you have the additional rate. Now, I know this is one of the contentious areas, and it's one of the reasons us directors do get some stick from employees because they question why we get a lower tax rate. But keep in mind, we're already paying 19% corporation tax on this money before we pull it down as a dividend. So this is why these rates are a bit lower. Number 6 is a question I see quite frequently, and that is how often can you pay yourself a dividend? Well, the short answer is you can pay yourself a dividend whenever you want to. You might see them being called interim dividends or final dividends. The only real difference is interim dividends are paid at any time throughout the year, and the final dividend is paid after your accounts have been done and all of the calculations have been done. I personally pay myself once a month, 12 times a year, always before my final set of accounts have been done. So all 12 of my dividends are technically classed as interim dividends. But from an accountancy perspective, when you look at all of this, doesn't make any difference how you do it. You can pay yourself whenever you want, providing the profits are there within the business. Number 7, do you need to keep minutes and vouchers? Well, the official answer from the gov.uk website is to pay a dividend, you must hold a directors meeting to declare the dividend. So you need a minute to keep track of that. And even if you are the only director, you still need to do this. So you definitely need to keep minutes of the meeting, and you can also issue a tax voucher if you want to. But I used to do this religiously for my previous business, but I don't currently do this for my existing business. So if you go onto any accountancy website, you'll probably see some quite heated debate between accountants saying you definitely need to do this and others saying you don't. So depending on what you want to do, I'm going to share with you my templates either way, and you can decide what is right for you and your business. So in front of me, we have the minutes template that I used to use. So at the top, you just have your logo, the date, and at the bottom, just some design things. So pretty much just use your usual headed paper. For me, I just used my invoice template and swapped out all of the invoice details for this information. So pop in your company details, who was present at the meeting. So I was the only person present. As it says, Darren took the chair. Then you say how much you actually paid per share. So I paid £2 per share. And it covers the dates for the month that you're actually paying this dividend. Now, this is the most important line here. Having considered the company's position, there are sufficient distributable reserves to cover the dividend being declared. So what you're saying here is you have taken a look at the business, you've taken a look at the accounts, and you've decided there is enough money, there's enough profit in your business to actually pay the dividend at this time. And then it goes on to say the company will prepare the necessary minutes and distribute tax vouchers to all shareholders. So I'm going to show you on the next page the tax voucher that I used to issue to myself. And as you can see, the template is very similar. So on the same headed paper there, all you need to do is include the recipient this time. So I included my personal address. So the company address is your limited company. Then you're the recipient of this dividend payment. So pop in your address and then include here the dates of when the actual payment was made. And here are the details of the shares. So I have 1,000 shares within my business. If your structure was any different, change it accordingly. The dividend rate is £2 per share. So the overall dividend payable was £2,000. This voucher should be kept. It will be accepted by the HMRC as evidence of a tax credit. Hopefully, it's never actually been tried or tested. I kept records of these for maybe 10 years and HMRC have never actually verified or seen one. But if you want to keep tax records with these minutes and these voucher templates, feel free to use them as you see fit. And then finally, how are these dividends actually paid? Well, it's really straightforward. For me, I pay myself by bank transfer. So I log in, I send a £2,000 over, and in the payment reference, I just put that it is a dividend payment. And then when I go into Xero or whichever accounting software you're using, you can log in and you can just assign that payment to your dividend account. So it's really, really easy to do that. So hopefully you guys have found this useful. If you want to know more about how to pay yourself, not just from a dividend perspective, but also from a salary perspective, I would highly recommend checking out this video. This is one I released a lot earlier this year, and it shows you how to pay yourself from a limited company in 2020, 2021. So I'd strongly recommend checking out that video. What I'll do is I'll link to that video in the top comment and pin that comment to the top. So if you do want to watch that, just scroll down after this video. As you're hitting that like button, and make sure you subscribe to the channel as well. Click onto the top comment and you'll see a link through to that video. I'm sure you guys will find it useful. Like I say, if you did find this video useful, I'd really appreciate it if you could take a moment, hit that like button, subscribe to the channel, and I'll see you guys in next week's video.